Welcome to our practical study planet. Please subscribe our channel if yet not subscribe it and press bell icon for further updates. Now we study about the rules for debit and credit of an account. There are 5 basic major accounts as we already studied before: assets, expense, revenue, liabilities, and capital. While following dual aspect of accounting, there will be always two effects of one accounting transaction to be posted in book of accounts in two different columns, one named debit side column and second credit side column. So accordingly, transaction to be posted under an particular account with the amount in specified column as per the debit and credit rules. So let's study about how an account will be debit and when it will be credit. If increase in assets and expense account, it will be posted in debit column, short form DR dot. So the decrease in assets and expense will be posted in credit column, CR dot. Same way, increase in revenue, liabilities and capital will be posted in credit column, CR. Decrease in revenue, liabilities and capital will be posted in debit column, DR. Journalizing of transaction. There is specific pattern to follow to prepare journal entries. According to the base we already studied in last slide. In illustration, we try to understand it. Mr. William started meat business with the name William Meat LLC. With cash 1000, car Nissan 2000, building 8000 and bank balance 3000, dated 1st Jan 2023. The next transaction bought meat stock from Chicks Trading Company amounting 500, dated 2nd Jan 2023. And paid cash 4000 on same day and balance to pay 100. Third transaction, balance paid 100 by bank transfer to Chicks Trading Company on 3rd Jan 2023. The fourth transaction, sold meat amounting 300 to Simon Butcher LLC, dated 4th Jan 2023, and collect cash 200 on delivery and rest 100 balance. We will make journal entries according to given information. Balance 100 collected cash from Simon Butcher LLC, dated 5th Jan 2023. And the last transaction, paid salary 50 to the staff, date 31st Jan 2023. Here you can see that. Now see the solution for that illustration. The first transaction is that the business started Mr. William. We are going to pass the journal entries the Mr. William book of accounts. So the format will be like that: date, accounts, details, and debit column and credit column. The first thing, we will write accounts wise. The first one, the cash head office, the cash in the business, assets increased, so it will be written in the debit column. So same way, the William Meat LLC bank account, he has the balance 3000, so it will be also the debit, because before 0 in the business, now it is 3000, so it increased, the assets increase, so it will be written on the debit side. Same way, the car Nissan, this is also in the asset, vehicle in the business, so also increase, so it will be written on the debit side. Building, also the assets of the company, so it will be increased and written on the debit side. Because due to the dual aspect of the concept, every transaction has the two aspects. The first, the assets increased, and on the other hand, all the sum up of these things. So the 14,000, it will be the capital of the business. Here you can see there will be always total debit side of the transaction in the journal will be the equal to the total credit side. The entry where more than one accounts to be used, either debit side or the credit side, is called the compound entry. You must keep in the, because it is not always the single, only the debit and credit in one line, another line. It may be the complex and more, so it will be then considered as a compound entry. So move to the second transaction. The same way, Mr. William bought meat from the Chicks Trading but paid 400 cash, the remaining 100 balance. So according to that one, the transaction will be written as the meat stock increase, asset increase, it will be written 500, and the cash paid, cash decrease, the assets of the business decrease, it will be written 400 credit side. So the Chicks Trading is the liability to pay because credit purchase, so it will be written over the credit side. So liability increasing, so it will be written as. Now the third transaction, William pays by bank transfer, so the liability is decreasing. Now the Chicks Trading Company will be debited, so the William bank account will decrease, so that it will be the asset decrease will be treated as a credit. Fourth transaction, now William is selling goods by cash 200, so the cash sale will be the 200, sales is the revenue, it will increase, so it will be written as the credit side. And the Simon Butcher LLC is 100 balance not paying right now, so it will be the debtors. Debtor is the asset of the company. That asset will increase, so it will be written on the debit side, and the sales will be called as a credit because yet not cash collected for that sales. Here you can see the cost entry ignored. We will see in the trading account due to avoiding the complexity. Here we are not discussing the cost of sales here because we will study in the cost accounting. The fifth transaction, here the cash paid by the Simon Butcher LLC, the remaining cash 100 balance now paid, so the cash asset will increase, so it will be written on debit side, and the Simon our debtors is decreasing. Before 100 we have to receive from them, but now received, so it will be treated as a asset decrease, so written as a credit side. Sixth transaction, salary paid to the staff, so the expense, salary expense is increasing, so it will be the debited 100, and the cash head office paid 100, so asset decreasing, so it will be written on the credit side. That is the accounting generalizing of the transactions. Thanks for video watching. Please like, share, comments, and be connected with us for such informative videos.